All right, going to make this quick, but welcome back to Trade and Wait. We're going to utilize ICT concepts, analyzing the ES charts for today, May 12th, and look for opportunities here. This is the highlight of my trading these days. It's 4-hour time frame and utilizing 5 to 5 minute chart. Looking for my one setup, which is some type of market maker buy or sell model, or some portion of it utilizing like a optimal trade entry model, and in some cases the ATM model, which essentially is still, for me, is still a form of a market maker buy or sell model. Everything is in this. This is what I'm focusing on: market maker buy and sell models and optimal trade entries, or aka a portion of the market maker buy or sell model. So let's just get into it. I'll try to keep this video as short as possible, aka maybe 10 minutes or under. So so here I highlighted the 4-hour, this 4-hour BISI, buy side imbalance, sell side inefficiency, this bullish fair value gap, and then I divided it into quarters. So that's that, right? Here we have a liquidity void and a bearish fair value gap that was violated here, making this an inverted fair value gap. So if you were able to seize this opportunity and go long here, and over the weekend, then this was a great opportunity for you. If you missed it, then I mean, too bad, right? I missed it. You're gonna miss trades. It's not for you. It's not for you. Focus on what you have edging. Focus on your trader identity. Focus on your business hours. So if your business hours is the AM session, then here you have a clear indication that order flow may be bullish, because this is the gap up, and you see the London session created the low of the day, and you see this big strong push higher. Essentially it's traded near this range. Even now it's in this range here, but that's another point for another time. So here you have price on the 5-minute chart staying above the quarter level of this 4-hour inefficiency. So for me there's two setups here. Both are actually market maker buy model. This one here is a market maker sell model, and this is a market maker buy model, right? So that's why this level is the target. So we have price running the London session high. You have a breaker market structure here on the 645 candle. Why is that significant to me? It's because of this imbalance here. So once that's been violated, I will look for an entry, and we have a small SIBI here, bearish fair value gap, that was traded into here at 725. So the SIBI is on the 710 candle, and the first indication that that's a sensitive level is on the 725 level, but the breaker market structure doesn't occur until 750. So we have this retracement at 830, and once you see a sign of weakness here, price failing to get above this swing high in the drop, and then you have a retracement here. So we have this SIBI on the 835 candle, which price reacts to at the 850, 855, 9 o'clock, and again at 925. That was more than enough opportunities to go short, targeting this swing low. That's a counter trend trade. In particular, 9:30 to 10 o'clock, aka market discovery time, is also a time frame that it's high probability that the market will perform some type of manipulation. In this case, it continued lower, huge displacement here, some consolidation or retracement here into this. For me, it's a breaker. You may not see it as a breaker. You may see it as a mitigation block or something similar, or that may not be you, or you may take it as some quadrant of this SIBI, this 930 bear bar. Let's see. But yeah, I would have taken it from here to here, and then short into this level here, and higher time frame key level for our upper quadrant quarterly level. That's your turtle soup or your smart money reversal, and this balance price range, this SIBI followed up. So this displacement lower, running this these stops here, and this immediate run higher, which some degree of strength. There's no market structure shift, but it's a change in the state of delivery because you have a displacement and a recovery. I'm gonna call it a recovery. So we have this, which if price traded into it, it should have went lower, but instead it's been violated. So you have this is essentially an inverted fair value gap. Two of them together makes a balanced price range. So this is an inverted fair value gap, and you can see that price essentially traded below it here slightly into the order block. If you don't trade order blocks, and so what? You just focus on the balanced price range or the inverted fair value gap or the bullish fair value gap. In any light, if you did consider this trade going long, this would have been your stop loss, would have been here, and your target would be 1, 2, 3, and then the intraday high. So this is the completion of the 1030 candle into this higher time frame for our quarterly level was the completion of the sell model, and trading into this would be your smart money reversal. This is your low risk buy, and here you have price trading above here, trading back into this violated bearish fair value gap, and with that we have an opportunity to go long. So I didn't draw it the first time, but this is what I mean by if you didn't trade this breaker, this high, low, higher, high, didn't see that, then you can trade a quadrant of the SIBI, right? Trade it into consequent encroachment of it and then drop below this swing low. And then price traded above, you see price holding above this violated bearish fair value gap, turning into an inverted fair value gap, and guessing more. Let's see what that looks like in terms of quarters as well. Let's see, 178. Gotta do more than that. Okay. And then here you have the same situation on the 5-minute chart where price traded back into the quarterly, the upper level of this inverted fair value gap, and continue higher. And that completes trading above this swing high, completes the market maker buy model. 2 opportunities, multiple opportunities to get into or trade in the direction of the trade, because this happened during the lunch hour. One of the characteristics of the lunch hour is that it may consolidate and it may be a reversal. And here this happened during the last 15 minutes. So that's also a macro for the last hour of trading. So yeah, I don't know how clear that is, but hopefully it's clear to some. And again, you just trade in what you see. Let's see what that looks like in terms of like the 4-hour, right? The 4-hour levels highlighted. So this ain't yours, right? This London session. No, I'm not available here. Here you have this stop run. And then once the stops are ran, then the 10 o'clock candle, 2 o'clock is your bull run. And then continuation during the PM session, higher above the intraday high, completing the market maker buy model. I mean, if you put it like this, it's low-key kind of like straightforward, right? It makes a whole lot of sense, right? Like, trade what you see. It's really I don't want to like, is that hard? Right. That's ICT vibe. I don't want to say it like that because sometimes the challenges of trading is many. There are many challenges. And one of those challenges is that you may overanalyze the charts. You may think of the charts as more than what the charts really are. And it may not be necessary to do that. It's literally try to keep it as simple as possible. It's the KISS method. Keep it simple. Keep it super simple. And I want to say the other variation of that, but keep it super simple and just trade what you see, right? And also, this is a game of probability, so you want to try to stack as much odds in your favor prior to putting on any trade. So, thanks for listening. Please like, comment, subscribe, and this is 11 minutes, so I did pretty good. I look forward to hearing from you guys. Please reach out if you fancy that. And I look forward to continuing this journey with you. Be well.